General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, so it's actually week 5. So it's kind of an offset week. There it goes. All right, so bullish sentiment went up 18%. Cash on the side went down 6.9%. And bearish sentiment went down 11.2%. So bullish sentiment got the biggest push. Forex Factory. Really, it's about Fed fund rate this week. Unemployment Thursday. And PCE Friday. Those would probably be the highest impacts. I'm thinking midweek reversal due to Fed fund rate. And on Wednesday, we have Tesla, Meta, and Microsoft. So 3 of the top 10. Then I put a note. The day before Fed fund rate, we sold off at least 50% of the time last year. That's worth being in the notes. Commercials, we got commercials selling. So they're hedging against the buys. See how heavy commercials are in the short position. So commercials are trying to bring things down. Could be before Fed fund rate. You want to be on the sideline, especially with earnings coming up. The cot hedging program, we're in a 12-month buy. So we in the buy program. We're expecting an interest rate to be unchanged. I believe, matter of fact, let me pull this up. Let me pull up a new window because I need CME Fed Watch. Let me see what this is saying. Okay. It's a 99% chance there's no change. 99.5% chance. Let me take this VIX off because I can look at that whenever. .5% chance with no change. Earnings is really the top 10. So Tesla, Meta, Microsoft, and then Apple on Thursday. And I just threw the top 10 in here so you can know the only ones that really matter when we trade in NASDAQ. Now, Netflix pushed us, but Netflix is number 10. So the monthly macro order flow is bullish. We reaccumulated under previous month's low and pushed up. So this the month we in. We swept down here, respected it, didn't touch the order block, but that's a good enough liquidity sweep. Weekly order flow is bullish. I do like 22,111 as a weekly objective. Nothing else really to glean from this because the next weekly high is the all-time high. So this is the last phase swing liquidity. I noted this weekly order block too, just in case we come down. It kind of makes sense to push up from there. Even previous week's low would be ideal. It's just kind of far. So first level this, second level this. Daily, we're in this swing. This is our swing low, swing high. This is relative equal highs. But this is a reversal candle because we took the high, took the low. So lower prices to start the week makes sense. I'm waiting for buys. Makes sense. Just based on that fractal. EQ of the range is right here. We got the weekly order block here. And we got the daily bullish breaker block with the fair value gap, volume balance. A lot of stuff, a lot of inefficiencies. So retracement seek imbalance. Lots of imbalances to pick from. H4, kind of just in this range right now. So we didn't expand below this, and we haven't hit that. H4, we kind of waiting for price to get out of this accumulation. After accumulation, comes expansion. But we need to lead the range. To track delivery. And from the H1 perspective, we'll let Monday play out, but selling from here makes sense. Retracements and lower prices. Makes sense to start the week. All right. That's that on that for the weekly forecast. Y'all have a good day. Peace.